The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out where the markets are at. Right now, we like to make sure you're current and up-to-date every single day on the markets right here at this once-time hour. And we got the S&P. It is currently down 3 points. We got the Russell. It is down 8. Nasdaq is flat on the day. It's up a mere quarter there. We got the Dow down 46 points on the day. Sounds worse, but Russell's actually doing worse on a percent basis, down 0.75%. We got the, let's see, looking over at the metals on copper right now. We got copper up about 0.7. We got gold is up almost 1%, up 10 points, moving pretty nice. Silver has exceeded 1% on the day. Natural gas is actually flat at the moment, completely unchanged, flat. Looking over at oil. Oil is up, 66 cents. We got it, which is 0.66 because it's right at $100. We got corn right now. It is down 4.5 points. That's a nice move. We got soybeans up $1.75. So pretty flat comparatively to the settlement price there. Euro dollar's up 4 pips. Aussie dollar's up 19. Pound dollar's down 51. Dollar franc is flat on the day. U.S. CAD is down 26 pips. Dollar yen down 44. Aussie yen down 21. Euro yen down 57. Pound yen down $1.34. And the euro pound is up 32 pips on the day. All right, so that gets us up and running there. And the next thing we're going to look at is what news do we got that is coming up that we can actually put into practice? What came out already? And let's see here. One of the things I do, one of my steps, now I actually go through and this is the first step, okay? Is I'll go through and I'll just look over here at Forex Factory and I'll just see what's on the list, okay? Is there anything coming up that is important to me that I think I need to be aware of? And I'll pull stuff that's moderate and high, and I'll actually look at every chart for at least the last 12 months. If that looks like it has value, I'll look at the last couple of years, last 5 years. And I used to do it in reverse. I used to start looking at 5 years of data, then I'd look at 2 years of data, then I'd look at 1 year of data. And so my what I found out, though, was 5 years didn't really, especially now, especially post, you can say post 9/11, but really post 2008. 5 years ago doesn't matter, okay? So, like, we've had massive crashes, we've had massive run-ups, we've had flat markets, we've had so many different things happen. It's really like, what is the current temperature of the market? What's happening in the last year? And 2 years, gives me a little bit of a seasonality, but, I mean, after 2008, seasonality got sort of broke. And I was a big seasonal spread future trader, loved it. But a lot of those seasonals just broke down. And so I actually tightened up how I traded. I went tighter into intraday instead of doing longer time frames. I did do some longer trading. I did, before that I did, I'd usually do almost a whole day to maybe a day or two of trades, and then I got longer and longer my time frames, so I started doing seasonal spreads. Those would last anywhere from a day to 3 months. And then I also did like 30-day iron condors like on the Russell. But after 2008 happened, things were just moving too fast, changing too often, and I just had a lot more control, and things just worked out a lot better for me, and so I tightened it on down, and I started getting into intraday trading. And realized that really I only need 1 or 2 years of data right now. Maybe in 20 years we'll be able to look back 20, but right now, not a chance. At least that's my humble opinion. I'm not saying there's not any value in it. It just didn't have the strength it once used to have. I think everybody would agree with that. So now if we go ahead and look at what do we got on the stats here. I looked at unemployment rate last night. So people were surprised I didn't bring that one up on the pound. The problem is it's like a 50-50. I mean, half the time the thing moves 15 pips, and half the time it moves, I'd say about a third of the time it moves 50, and then maybe 20% of the time it'll move 100 pips. And so it was such a high variable of, like, I couldn't choose a good iron condor strategy that had my high win percentage. I couldn't choose a good straddle that had my high win percentage. When I do those pound trades, most of the time I like to be able to put them on. I was actually up to be able to do this trade this morning, but I didn't. But I like to put those on like around midnight and go to bed and just let them work themselves out. But I didn't have any strategy I was confident in, so I didn't go with that. I just like, hey, I want to be aware of that change. We can pull up a pound chart here and look at a couple things on it. Give me 1 second. I'll open that on up. But, yeah, there's just nothing really there. Like I said, talked about this earlier in the week. I'm like, it's just a light news week. And I'll throw on the pound because that was really the biggest news we had, as far as last night goes, or early this morning. And then we'll look over at, unemployment claims, all that fun stuff. That's coming up tomorrow. I want to talk to you about that because that's something I'm starting to play with, as well as oil inventory and as well as natural gas. So all three of these I'm actually starting to mess with a little bit, and I've stayed away from them for quite a while. But in the last couple months, my news plan, I've actually been putting them in there and checking them out, and I've never done that before. But really because I've been able to fine-tune those expectations of ranges. And those reports happen at the same time every week. And that's how I calculate my expectations. It has to do with how far do I expect it to move on that specific minute of the day, hour of the day, whatever, that day of the week. And since it's the same time every week, those can work out pretty well. So we'll talk about that. We'll even look at oil along with it. For some reason, I loaded the dollar CAD. That was not my intention. And so got that one up. All right. And once that renders, then we'll have it. Okay. So let's see. We need to look at early this morning. And what do we got right there? Wow, this doesn't even seem that late in the day. Okay, so looking at 4:30 over here. Here's the report. Unemployment comes out, and we get a move, and basically we hit sort of the extreme of that move. It actually happens right at 7, but got about 46 pips. So it hit, about that 30% of the time it hits 50 pips. And if we take it all the way back to midnight, because that's, I guess, the right I like to get into the trades, we didn't really get much additional movement out of it. So you go back here, and yeah, about 40, 50 pips right there. So you probably at best would have broke even on the trade if you would have done a straddle or an iron condor. An iron condor, you've been really pushing it to get 50. Maybe you got 50 on the trade, but you probably did about break even either way. There really wasn't anything in there. I mean, you're up or down a few pips, depending on bid-ask spread and where it exactly set at. And so that should help you out some. Let's also go over here, and we got the pound. Let's check out what else. I wanted to go in, and I want to sort of dive in on oil for you. And I wanted to dive in and look at natural gas. And I want to talk about unemployment claims. I saw a question on that pop up in the room lately. And so let's go over right now, and let's check out oil. So right over here, we'll bring it on up. And, of course, you want to make sure you have access to the scanner because it'll make life a lot easier, too, when you're trying to do these types of trades. But you're going to know what your expectations are on the movement at the time of day when the report comes out. And there's a couple ways you can do it. You can do it like at the top of the hour. You can do it by the 30 minutes, whatever those expectations are. Be aware of your deviation levels. This is really a trade about expectations. Bottom line, that's what this oil trade is all about. So, if you would have tried to do the oil trade today that we're talking about here, how may that have worked out for you based on expected movement and what happened and what didn't happen and everything else? How could you do it? And let me open this up. I'll show you some cool. There's several different ways to pull this off, but unless we get just a massively different release, which we didn't. I mean, we got 0.9 million on a negative 0.4 million barrels. That's not like earth-shattering for oil. But anyways, so if we look at this right here, when the report came out between 10 and 11, there looks like we have a little bit of a gap in data too. I may need to pull up. Yeah, let me pull up a different chart. 1 second. I'm sorry. I'm going to pull this one up over here because I'm playing with some settings on my platform in order to increase speed, but may not be increasing it the exact way I want it to. Okay, so file, let's see here. New is the fastest way to get this oil chart up open right now. And up oil, and then I'll say, okay, what do I want to look at? I like 4-minute bars. I can also do 10-minute bars. All depends on what kind of strategy I'm trying to do. So right here, I'll put it on 4 minutes. If I'm doing volume analysis, like for magnet pricing, that's where I'm going to go and pull up my 10 minutes. And then I'll go down here. I want to make sure I'm looking at 24/7, so I'm not cutting off hours that the market's open. And, whatever templates you've built that you like to use. Everybody has, I guess, their favorites. So I'll pull that one up and we'll look at it. Okay, so now that we have the chart up, and it ought to be rendering over here for you so you can see it. Takes just a minute to share through, and I'll get that other one updated in the commercial break there. But once we got that up, then we'll be able to walk through the oil trade and the ranges, because that's really what I want to go through with you. I want you to understand how using expectations can help you with these trades. And let me show you over here. I want to pull this piece right there. And, all right, we'll do it right when we get back. Oh, there we go. Chart's up. Okay, so right when we get back, we'll go through this, okay? Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so we're back here to the Diagnostic Trading Hour. And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. Listen, I've been in the markets for 40 years. And if I was 40 years younger, I'd move in next door to you, and I'd be playing tag with the market with you. You're absolutely unique. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. I had to call in. You don't get too many calls, but I got to tell you, you're not just blowing hot air out there.
I appreciate that. Thank you very much. I'm glad you enjoyed the show. That's awesome.
No, I can't. I play the cues, and you know, when you play, you stick with one thing. I'm too old now to be jumping around, but 40 years ago, I'm telling you, I would be right there with you. I'd be in your bed, for Christ's sakes. We'd be rocking them.
My wife might be like, what's going on? Yeah, there we go.
I swear. And I just had to call and tell you.
That's awesome, man. I appreciate that. Thank you for calling in. That's awesome.
You don't get too many calls, and what you do is absolutely unique. I've been around all the big guys, listened to all the big guys. A lot of them are dead. And well, hey, that's how long I've been watching,
Right, yeah.
But I tell you, you're right up there with them. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the markets. It's very, very, it's awesome. I'll steal one of Tom O'Brien's lines. You're awesome, bud.
That's great, man. Thank you so much for the encouragement. I appreciate it. I'm glad you're really enjoying it.
On your charts there, you got different colors for different things and stuff. And when you go into them and how you look at them, it's a whole unique way. Maybe you could pinpoint the stuff that in the chart that means something to you.
You bet. Yeah, anytime.
I was looking at volume bars on the oil chart there that was all red and the market's going up. I don't get that, but I think it means that it's danger because you got a power move going up. You see, like in the middle of the chart.
Yep. Yeah. What I have right here is I have two things looking at my volume chart.
Yes.
So obviously this is my chart. These are my expectations of movement. Okay, how far I expect the market to move.
I love that.
If volume's exceeding expectations, I expect it to break out of this middle box, okay?
Is that the red boxes on the bottom?
No, that's right up here. Literally, there's a little right there, like that section.
Okay, go down to the bottom.
The bottom is the high to low range. That's how far I expect the market to move from bottom to top.
Go down to the indicators.
Exactly, to the very bottom. Yeah, right here, right?
Those indicators, move your cursor again.
Right there. That's what you're talking about, right?
Yes, right there.
Yep. That's the expectation of movement from high to low. So how far is it move for this hour, for this specific hour of this day of the week? How far do I expect it to move? That's the orange line, okay?
Uh-huh.
From high to low, how far do I expect it to move? And then from like high to low or low to high, whatever, how far has it moved? So red is how far has it moved up from the low? Okay, because the further it goes up from the low, then it's met that expectation, and I expect it to pull back. So you'll see like we get this red, it's right near that expectation line right there, and then all of a sudden the market pulls back. It does it right here. It's right near the expectation, and it pulls back. And so I can like sort of bring that up for you, make it even easier to see. But right there you'll see. And so it pulls back right on that. And I use those expectations. If it's not breaking those expectations with volume, it's just going to stay in this little range. I can scalp trade it. I can go in and I can grab 10 ticks over and over and over again. There's a lot of things I can do. But if I want to get those big moves, if I want to know when that pullback's coming, if I want to grab $1, 50 cents out of the market, $500, $1,000 at a pop, that's when I look for those expectations. And, right here.
That's your timing thing where you jump in, jump out.
Yeah. And it's not just it's price.
Is that like for years of back testing?
I tie in implied volatility, and I look at implied and historical volatility both. So historical volatility is like how far has it moved for that hour of the day, for that day of the week, for the last say 10 weeks. Okay, and then you got to factor in and out news. You got to deal with holidays. There's a lot of other stuff in there, but that's basically the general concept. And I also look at the implied volatility of the options themselves, so the expected movement built into option pricing. And I was taught how to do that by a floor trader on the CBOE. And the two together give me a very, very accurate representation of how far the market's going to move really any minute of the day. And
thank you for your time.
That's it.
I know you're coming to the break, and I'm sure more than just I appreciate you.
I appreciate that. Thank you for the call.
You bet.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so we're going to dive into oil, and then we're going to look at natural gas because it's coming tomorrow, and we're going to look at unemployment claims as well. And like I said, I look at the expectations on the hour. So what I'll start doing is on the show, I'll start providing you, like next Tuesday, I'll give you the expectations for oil on Wednesday because I calculate the numbers every Sunday for every minute and hour, like literally minute and hour and day of the week. Okay, so on Sunday I calculate that and then I update them with implied volatility the day before at about 8:30 in the evening. That's when we post our implied volatility numbers over on the scanner for what the deviation levels will be for a day. So on Tuesday I'll give you the numbers for oil for at least the expected movement during the oil release. Let's see what we got right here on the expected oil release. Okay, so we got a low to high of 61 pips. And what was the expectation? So look at that. On the hour, okay, we had an expectation of 67 pips. So not too bad. Literally nailed. I mean, with it, you can't 67 pips, 6 picks off. Perfect. Pop back up before it fell back down. What can you do with that knowledge? Because you don't know if it's going straight up. You don't know if it's going straight down. You don't know if it's going to go down 30 and up 60 and basically net a 30 down, 30 up. So what can you do? That's where you go in, and there's a couple ways to do the strategy. You could look at what I like to go neutral on news trades. That's been my big thing lately. And when I say lately, I mean like going on a long time now. I used to be on the straddles because, man, you want to get those big moves. I love those big moves, man. It goes like oil move $2. I can't believe that. You're just all excited. Newly reality happens like maybe, those big moves are 1, maybe 2, rarely 3 out of like the last 12 plus releases. And I realized real quick, I'm like, if I'll stop going for the big moves and I'll just start taking the simple profits consistently and I'll equalize my risk for a 1-to-1, then I can be profitable 9, 10, and 11 out of 12 times. And, that's good. And obviously, that's what you're shooting for as a trader. And it's a lot easier because what I kept realizing is on the straddles where I was going for like the big moves, if I didn't take it off soon enough, it'd fall back and I'd lose. So what did I do? I always took it off too soon when it moved big. I never got the big move anyway. Right? Or if I didn't take it off, then I lost. So like either you don't take, like the one time you take it off is the time it takes off. And then the next time, what do? Oh, I'm not going to take it off because remember, I could have made like thousands of dollars last time. And so you don't take it off, and then it falls back, and now you lose all your money. So that's where I got a little bit tired of that pattern. You might have been there. You might be there. And so I was like, I'm just going to go neutral on these things. Now I don't have to worry about taking the thing off. I just need it to stay in a range. And even if it breaks outside of that range, I don't care. I can go in this thing. If I could get this at the top of the hour, or even, whatever. So let's say if I can get it 1 hour out, and if I could bring in, let's just say $60, and you'd bring in more than that. But if I could bring in just $60, then I have a $60 prop potential with a $120 up, okay? Or what would it be? It'd be a $90 up break even, a $90 down break even. Okay, so 90 cents up, 90 cents down, which is a $1.80 wide neutral trade. That's phenomenal. So $1.80 range, I'm break even. If it stays anywhere in beside that, I actually can make some money. So that's why I trade these trades. And if I get like real into it for you, if we dig into what I mean, what I'm talking about is these iron condors. And so, like I said, if I could bring in, and I'm giving you a low number because oil is one of the higher implied volatility based instruments, which means the options usually cost more. If I can go in here and for $30, okay, I can, sell the one above, the box spread above, and $30 I can buy the one below. Okay? That's where I'm really making some money. But here's the beautiful thing is, if I sold here, and I can make $30 down, so let me try to, if I sold there, and I can make $30 down to here, and I'll give you a nice red arrow to help out with that. And if I bought here, and I can make, $30 up. So a total of $60, going right to that center line there, okay? And let me, I'll draw that arrow up, right to there, and then I'll get a nice, obnoxious line right there in the middle. That's my max profit area. So I make $30 down to here, $30 up to here. Well, I'm break even on my short if it's where I sold it at, but I made all $30 on my long. So now I have this break-even point where I actually still make money so long as it stays 30 pips below here. And I have a break-even point down here where I make money because I make I'll make $30 here, or $300. I mean, it depends on how many you're doing. I'll be break-even. It'll cover my cost 30 ticks down. So if we just did a 60 pip one, then to give you an accurate, a true break even would be 120 ticks wide range, which by the way is double the expectation of movement. And it's the full expectation, like from high to low. It's the full expectation of movement from release to high and release to low. So if I just got the expectation of movement, I'm break even. And it comes out at the same hour every week. Okay? I mean, there are a couple exceptions when there's holidays and they bump it to Thursday. But The expectations are spot on this one. This is one that we get every single week. So we got the big ones and the little ones all calculated in. And so you look at these numbers right here. I'm like, you're telling me I can have a 120 cent wide break-even trade on oil. Yeah. Well, that is fantastic. Okay, I love that idea. And I mean, I'm not even drawing it really that well. If I went in and drew it all the way up, we'd actually be up here at, if we go 66 up, just to give you an idea of looking at these ranges. Okay, that's going to put me like right there. And then if I take that down, 102.30, that should put me down to like 101.60. Okay, it's going to put me, basically, it's the entire range. So what happens if it expires anywhere, like every tick above this, I can actually make some money. Every tick below it, okay, I can make some money. It has to just completely bust out of expectations for me to really lose on the trade. Is that going to happen? Yeah, it's going to happen. Do I need to limit my risk? Yeah, I do. That's one of the nice benefits of Nadex, is your risk is capped. But, I mean, if you get this down, I mean, this is a whole different, it's an easier way to trade. You can do this every hour. By the way, you don't have to do it just on news. News is the easy time to do it 1 hour out, or 30 minutes out. Okay? But I can go in here, and I can make a couple simple changes. And some people are big on the binary butterflies. They're good, they're okay, but, I mean, they're not my preference because they're all or nothing, versus like lose a dollar, make a dollar, in that line. Spreads are very simple. They're like calls or puts. So they're variable payout with a max risk. And a capped profit, but that's okay because you got capped risk. And the capped profit is huge in comparison to picking up on the strike you choose. So if we go over here, we look at this, and I go, okay, well, what if I wanted to, instead of looking at the last 60 minutes, what if I wanted to look at an hour and 20 minutes? Okay? And I can do the same thing here. And I can even do the same thing on my, I guess actually that's all I would pretty much need right there. So I can look at an hour and 20. I can look at 2 hours out. I can still do them every hour. I'm just doing 2 hours out every hour. I can do 3 hours out. And if I want to see if it will work or not, just look at it. Did it stay within expectations? How often did it do so? Okay, what kind of premium can I get? Does that premium look like it's worth it? Will it cover it if it stays inside, say, close to close or high to low or whatever? And you just sit there and let paint dry. Like, oh, another hour up, need to put another trade on. Another hour up, need to put another trade on. And you can even cap your risk if you want to. Sometimes you don't even need to because the premium payout. Maybe you want more time. Maybe you want to look at the 230s. Maybe you want to do this one time a day. One time, you can go in here and I can do the exact same thing, and I just start playing with my expectations. And I go, okay, well, I want this thing to end up, let's start it 30 minutes into the day, and let's say I want to maximize, I can get in the 8 o'clock, the 2:30's at 8. So that's 4, 5, 6.5 hours. Theoretically, we'll say 180 minutes. Let's just see how that goes. And what I'm trying to do is I'm trying to make it line up with, say, the 2:30 expiration. Okay? And if it lines up, great. If not, I'll just adjust my parameters a little bit until I get it right on the 2:30. Maybe a little bit too big, too small, whatever. I got to do it on both of them, but that's okay. I'll need one at a time. But it looks like we might be pretty close. Let me adjust the other one as well. And if we got it, then say you can hop in there and you can do one of these things a day. And by having more timed expiration, see, the benefit of the news is you can hop in 30 minutes, an hour, maybe 2 hours. You're done. You know what to focus on. And I used to have to use news to do these because I needed some sort of stat to have an expectation of movement. Now I don't need that anymore. Now I have the expectations of movement like all day long. And so, let's see, that's going to end us. That's still not good enough. We want more time. So, let's make it bigger, okay? And you can just literally keep expanding this to get it right to where you want it. So I'm going to go in over here. I'm going to bring this up. And let's try... It's not just adding an hour. It's sort of weird how it works, but... Because it's got a... You can actually have... I've got a formula for it. I need to, like, put it in an Excel sheet so I can just type a button. But, where it will tell me exactly what to use based on the expiration. And let's see here. All right, we're getting closer. So now we got 8:30 to... What do we got? 12:30 there. So basically we need... let's add one more hour, because remember, it's going to add an hour, over and over and over again. So we're going to add one more hour in here. And you'll do the exact same process for if you want to do this on unemployment claims, if you want to do it on natural gas, anything that happens like every single week. Okay? So reports that happen on a weekly basis are really your ideal expectation movements that you want to be looking at. And, okay, so that just about got us there. I was thinking it might be 2, but it looks like it is going to be 2. All right, so let me add in that one last piece, and I think we will have what we're looking for. And which makes sense. I mean, 360. We've probably about 6 hours, going from 8 to 2:30. So, and starting 30 minutes late. So that way we end on the 2:30 range. So 8:30 to 2:30, 360 minutes. Yeah, should have thought of that to begin with. But anyways, we got it now. So it ought to pop up and work for us, and then we'll have our range expectation for the day. There we go. And I can always push them out to make them line up more. You can play with the numbers. So now we got the exact right amount of time. Now I just need to bump it from 12:30 to 2:30. So to do that, I need a 2-hour add-on delay. And we have the right box size. Now we just need the right delayed start time. This range is going to tell me what is an acceptable premium on an iron condor. And it is so much easier. It is so much easier as a trader to collect premium. So there we go. So much easier as a trader to collect premium than it is to pay it. And so if I can look at this and go, on most days we're going to stay inside this close to close. Like it'll go down and then up some. Probably don't expect more than the deviation move, right? So, and just based on where price is at right now, then it's reasonable for me to expect, I could make this start at 8 if I wanted to. Then it'll stay, within X range. And now I can back up. I can look, how did this work on previous days? And I go, okay, well, how did it work yesterday? Oh, look, it stayed inside that close range. Go back, and I can do these little iron condors. I literally used to do iron condors every month, 28 to 30 days out. This would be one time a day. This is not, you don't have to be sitting in front of your computer all day long, okay? You just need the right information in front of you so you can make money with it. All right, we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And, all right, so we got natural gas. Let's talk about that one real quick. We're trying to get a couple of these done before the show wraps on up. Natural gas. So to do natural gas, I need to look at Thursday's expectations. So let me go to last Thursday. That'll give you a little bit of a heads up on what's coming out. And last Thursday was the 8th. And so let's go on back and look at the 8th. And, of course, this won't factor in the 8th itself, but it'll let you know sort of what we were looking for on movement expectations when the natural gas inventory report came out. So you can use this to look at for at least demo trade it, okay, over at Nadex.com. Go to TFNN.com, click on Nadex or top right corner there, and under trading it, demo trading account, you can get set up. But right over here, we were looking for an expected move of 118, okay? That's our expected move on the hour. And leading up even to the actual announcement, we were breaking them. It's hard to see because it's so there was so much volume. But right here, you can actually tell we were exceeding expectations pretty good, even going into the announcement. So like right here, I mean, there's quite a few bars that are higher than expectations. We're breaking out of that. We're breaking out of that close to close. And again, we have an expectation of 118 pips. Then natural gas comes out, right here. Boom. Out. Done. And keeps moving. Does its thing. Right. Look at me. Right there. Right to the low. And really a perfect move by natural gas. But understand that's the number you can look at as an expectation of 118 or 0.118. I guess would really be the best way to put it there for you. And 0.065, okay, is our close-to-close range, which means usually what we're expecting is it to go down and come back, okay, unless we just get continuing exceeding volume. We got quite a bit. We didn't get all the way back up there, but we got pretty close. So if I back out, you can see we actually got pretty, it was heading back up. It was trying. So, but that's sort of what we're looking at, going down and then coming back up and ending in there, because markets just don't usually go straight down. Use that. See if there's enough premium to take advantage of that on the iron condors. Also, if you're in a trade, if you're directional, if you're straddling, if you're hedging, my favorite strategy, which is my number one favorite strategy, hedging futures with Nadex, you go in and you sell, like let's say you take up, like I think natural gas is going down. Cool. Sell natural gas and buy spreads to hedge it off. We have all the ratios and the scanner there for you. You can hedge the thing off. Flies down, awesome. You can make a really massive profit. Flies against you, very small risk. So that's one way you can trade it. But when should you look at starting to take off some of that profit? Or when should you at least be tightening your stops? When you start hitting that expectation, which to me I look at 75% of the expectation. Okay? That's when I'm thinking that there's a high potential reversal. If there's volume, at about 75%, I'm expecting that. If there's not any volume, I'm expecting it to pretty much turn around when it hits the close to close. So when it hits that inside expected movement. And all right, so we got natural gas. I guess really the last piece. I don't know if we're going to get to when it will. Natural gas is coming out tomorrow. We got unemployment claims. So you could also get expectations for unemployment claims. Same report every week. Pick your instrument. Okay? And just look for consistency on it. Go back and look at it every week for like the last, say, couple months. And to see how spot on it was. And then find the right premium using the scanner. All right, y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.